What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. If you want up to 60 free stocks, Moomoo is going to give you up to 60 free stocks when you open a new Moomoo brokerage account. You put $100 in that brokerage account, they're going to give you 5 free stocks. You put $2,000 in your new brokerage account, they're going to give you 25 free stocks. And if you put $5,000 in your new brokerage account when you open it, they're going to give you 60 free stocks. Limited time offer, so don't delay. Get yourself down in the description box and click on that Moomoo link, which is the first link. And open up that Moomoo account today and go get your free stocks. I will also send you a couple of Moomoo tutorial videos that'll walk you through how to use the Moomoo brokerage app. All you got to do is send me an email through my website, www.richardfain.net. Second link down in the description box. Let me know you've opened the Moomoo account and you funded it, and I'll send you out those tutorial videos. Well, the United States and China are back at it again in this never-ending trade war. Now, if you roll back a few weeks, Secretary Bessent went over to Switzerland and met with his Chinese counterpart, and they said we had kind of hashed out a deal. So, 47 rolled back the 145% tariffs. He rolled them back to like 30%. And they said, we're going to continue the dialogue and we're going to get this thing done. The markets love that news, and you saw what happened to the stock market, to companies' stock price. They started to go back up because we were getting a little bit of certainty and some clarity. Pump the brakes. It looks as though that certainty and that clarity is quickly fading away. But here's the thing that surprised me today. Even though we got this news of the United States and China in a feud again about these tariffs, guess what the market did? It did pretty good today. So are investors starting to just say to themselves, just ignore what's going on with these tariffs? Because they know that, they're on, they're off. Remember, 90 days, 90 deals, no deals. And we're approaching the 90 days. I believe, July? Sometime in July would be the 90 days. But I think investors are starting to just say, something, move away the noise. Let's get back to making money. Here's the headline. S&P 500 posts modest gain to start June as investors shrug off global trade tensions. And they're basically talking about China, US, and then EU, US, right? Those are your two big ones. China, US, and the European Union, US. Stocks rose on Monday, the first trading day of June, as Wall Street shook off increasing tensions in global trade. The S&P 500 climbed 0.41% to close at 5,935, which is pretty dang on good, guys. We're getting close to 6,000, right? Mid-February, 6147 was our high. We're almost at 6,000 points, even with the trade war tension. So that's good news for us. NASDAQ Composite advanced 0.67% and ended at 19,242 points. The Dow added 35.41 points, or 0.08%, settling at 42,305. China pushed back against U.S. accusations that it had violated a temporary trade agreement. Instead, the country blamed Washington for failing to uphold the deal, a sign that negotiations between the world's two largest economies are deteriorating. Long term, guys, that's not good news. But if you've been watching my channel, I have went on record and said that this trade war stuff is going to be with us for 4 years. As long as 47 is in the White House, it's going to be with us because that's his little sledgehammer, right? That's his sledgehammer. So China, European Union, Mexico, Canada, they're starting to understand this, right? And they're starting to kind of say, let's ignore this. Let's trade amongst ourselves. Now, don't get me wrong. The United States is a monster. We got the biggest economy. We got the most consumer. Well, we consume the most. We don't have the most consumers, but we consume the most. See, we import more than we export. And now that these countries are starting to figure out that we ain't real serious about this, because why? We say we're going to do something, we take it back. We say we're going to do something, we take it back. So they're starting to understand, he's bluffing. Let's just keep our posture. And that's what we're starting to see happen with some of these countries, right? Tensions reignited following a brief pause after U.S. Treasury Secretary Scott Bessent and Chinese Vice Premier, basically Bessent's counterpart, right, over in China, agreed to a 90-day suspension of most tariffs. A senior White House official told CNBC's Emin Yevers Monday that 47 and China's president are likely to speak this week. Maybe that's what's needed. Maybe the two presidents need to get together and try to figure this thing out, right? Now, here's the thing, though. China's not going to bend the knee. China is not going to bend the knee, guys. So that's where I think the breakdown is going to happen. Because clearly, we want these countries to get in line with what we want them to get in line with, right? And a lot of these countries initially, not China, but some of these other countries initially was like, oh yeah, let's do that. But now they're figuring out it's just a bluff. Even the investors on Wall Street have figured out it's just a bluff. So now people ain't taking it real seriously, right? And China seriously is not going to bend the knee, guys. Conversations between 47 and China's president could prove critical to much needed clarity for the largest economies in the world. This is coming from the chief global strategist at Freedom Capital Markets. If they get clarity, look for another leg higher in this market and talk of new all-time highs. If this back and forth goes on, then expect volatile markets to continue. See what he's saying there? Give us some clarity. Give us a direction that you're going. Markets can move up. If you don't do that, we'll continue in this volatile situation that we're in right now. That's basically what the experts are saying. Come to some agreement, markets go up, we get back to normal, or don't come to an agreement and things continue to be just volatile, right? Just continue to be volatile. Tensions between the U.S. and the European Union also heightened after 47 said he would double steel tariffs to 50%. The EU warned that this undermines negotiations, with a spokesman adding, this decision adds further uncertainty to the global economy and increases costs for consumers and businesses on both sides of the Atlantic. Steel stocks rallied on the increased levies. Monday's moves come after the S&P 500 closed out the month of May on Friday with a more than 6% gain. So here's the deal. Why are markets closing higher? Why on what should have been bad news, China, United States, tensions, tariff war, that should have sold the market off. It would have a month ago. But what's happening right now is people are understanding it's just a bluff. And now we're in a situation where EU, China, Mexico, Canada, all of these countries that we do business with trading partners, are starting to pull back and say, let's wait him out. Let's wait out 47 and these tariffs. Let's see if he's serious about it. Why are they doing that? Because he's demonstrated that he's not serious about it, in my opinion. Even investors on Wall Street know this, guys. That's the reason why the market did. Now, don't get me wrong. If something crazy, think about it this way. Even with the increased tariffs for steel imports to 50%, that should have freaked everybody out and we should have had a dip. But we didn't. Because people are not taking it serious anymore. These countries are not taking it serious anymore. They're starting to say, you know something, we see a pattern here. We're not going to play this game. We're going to buckle down and force the United States to come to the table. And at some point we have to. Why? Because we import more than we export. See, most of the stuff we use, especially on the consumer side, a lot of that stuff we have to import. You got back to school coming soon. You got Christmas coming, the holidays. Guess where all that stuff comes from? Other countries. So at some point, we're going to have to get in line and get reasonable with these countries. Now, I don't understand how prior to, January 2025, how prior to that did we have all great relationships with these countries? And we had the #1 economy in the world. I mean, some were calling it a Goldilocks economy. We had 2 back-to-back years where the S&P 500 was over 20%. Inflation had come down from 2022 at 9% down to in the 2s. Everybody said we were going to have a soft landing. Matter of fact, Federal Reserve reduced interest rates, I believe, by 100 basis points the tail end of 2024. But now look at us. How did we get here? That's a question you need to answer. How did we get here? Drop it down in the comment box and let me know, how did we get here? Thank goodness Wall Street investors are starting to see that this thing is just a poof. And they're starting to get back in the market. That's good. That's good to know. Because that way we can continue to build some wealth, right? If you want up to 60 free stocks from Moomoo, you know what to do. Get down to the description box, click on that first link, which is that Moomoo link, and get you up to 60 free stocks based on the deposit that you make in your new brokerage account. Open up that account today and go get that free stock. www.richardfain.net. I got 10 big boy blue chip digital products that I believe can help you become a better manager of your money. Get your financial literacy up, guys. It will help you manage your money better. In return, you'll have money left over to be able to invest to multiply. Second link in the description box. Click on the website link. Check out those digital products. While you're in the website, consider joining the fastest growing financial community on Patreon. We're called the Wealth Builders. Man, all we do in that community is chase financial freedom. And we do it community style. None of us are experts. We don't try to tell you what to do. But we are there to help one another through golden nuggets, tips, best practices, what's working, what's not working. We provide a safe environment where no one's trying to sell you nothing or any of those shenanigans, right? So if you want to get yourself out of the matrix and come join a community of not experts, but just regular good people who are trying to help one another get to wealth, inside of the website, click on the join button, click on the membership button. It'll take you over to Patreon. And consider signing up and come join us. Matter of fact, tonight we got an 8 p.m. Eastern time live stream. Even come check that out. We'd love to have you. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy, and I'll catch you on the next video. Peace.